Today's session, we're going to be talking about two products in the Baltimore Life portfolio, our Generation Legacy and our single premium whole life products. Both of these products are really designed for your senior clients in mind who have what we like to call some leave behind money or sideline money, money they don't need to live on, but they simply want to leave behind to the next generation and do it in a very tax-efficient way while increasing their estate value. No matter whether you have after-tax cash dollars or qualified money, Baltimore Life has a product solution that we're going to talk about today to do that. In our session today as well, I'll be getting into some sales ideas and marketing tips and support that we provide here right on our agent website. A little bit about the marketplace before we get started. It's absolutely huge. About $1 to $3 trillion in wealth is being transferred each and every year right now between now and the year 2052. So every year, $1 to $3 trillion in wealth has that opportunity to pass along to the next generation. About 55% of your clients' wealth is moving on to their family members. 16% of that wealth is moving on to their favorite charities. So yes, 71% of your clients' wealth is moving on to people and organizations they know and love. The question is, are they maximizing the amount of money they can pass along, and are they doing it the most tax-efficient way? Well, the first product we're going to talk about is Generation Legacy. This product is highlighted by the ability to pass single premium funds not needed for daily living from either non-qualified deferred annuities or other qualified plan funds, such as 401ks, IRAs, 403bs, and the like. This is a chance for your clients to, like I said, leave an estate for their heirs, favorite charities, increase their estate value in a continuing low interest rate environment out there, right? People are having a hard time seeing growth in their money. This is a real way that they can see growth of money they can pass along. Issue ages for the product are ages 60 through 80, and our product very uniquely combines with a single application you're going to write the issuing of two products, a single premium immediate annuity that is going to receive the transfer of funds, and that money is going to annually fund a limited premium payment whole life product. We'll get into the details of that. But again, a single app issues two products, and once they're issued, Baltimore Life seamlessly administers that product for your client and you to make sure all the benefits and features we'll talk about are received. We have simplified underwriting on the product through 4 tables we'll talk about, as well as automatically included in all states where it's approved, and that's the high majority of states, is our accelerated death benefit rider. We'll talk more about each of these in detail. A little bit about on that qualified market side. About $2.3 trillion of in-force deferred annuities are out there. About 60% of the money is in the tax qualified variety. About 40% are in qualified funds. So as you know, because you're probably selling annuities, I'm assuming, that you know, a significant share of your clients' annuities, for example, are just being transferred to the next generation. They're using it as a great vehicle to accumulate wealth, but most people, many people just don't use the income feature of an annuity. They don't annuitize the funds, and they're passing that along to the next generation. Of course, if they have sideline money that's qualified, there is an RMD rule that's going to kick in at 70.5, as you know. And of course, if they die, they're simply going to pass that taxation along to their heirs. So the question is, we know annuities are great products, but is it the best product to die with? So with that in mind, let's conceptually talk about Generation Legacy. Think of it as a gift your client's going to pass along to the next generation. And inside that gift box, you're going to aid your client in transferring those qualified funds from annuities or other qualified plans. Inside the gift box with a single app, as I mentioned, we're going to issue 2 products, a SPIA, single premium immediate annuity, that will receive the transfer of funds, along with a limited premium payment whole life product. Now, over a period of either 7 or 10 years, depending on the issue age of the client, we're going to make annual payments for the client from the SPIA to pay the premiums on the whole life product. So what dictates the payment pattern? It is the issue age. The client 60 to 74 will issue a 10-year SPIA along with a 10-year life product, and for clients 75 to 80, a 7-year SPIA along with a 7-year life product. Now here's where the product really gets rich in features and benefits. What happens if your client were dying early during the period of time while the SPIA is funding the life insurance. Well, we know that the life insurance will always pay an income tax-free death benefit that's much greater than the single premium paid. But with our product, your client's beneficiary will also receive the remaining payments from that SPIA product. So if it's 8 years left on the 10-year plan, they're getting 8 more years of payments. We'll talk more about the remaining payouts from those SPIA deaths in just a moment, but they're getting both, and that's a very rich benefit for your client. At the end of 7 or 10 years, the life product becomes paid up, the SPIA goes away, it's done its job, and that life product continues to provide an income tax-free death benefit, cash value growth on a tax-deferred basis, and yes, the accelerated death benefit rider, which truly can provide cash to your client at a time when it's needed most. So just to review, the issue ages are ages 60 through 80. We base our pricing on current age or age at last birthday. The reason this is important is because with this product, you're going to have a transfer of funds going on from other institutions. So that transfer might take 20 to 35 days. When we receive the funds that day, whatever the client's age is the issue age for that client. The minimum premium to get started, it's only $5,000. How many clients out there that you know have small annuities, and many of them they bought over time with the only goal of growing that money, but maybe never needing it for income. They want to pass it along. Couldn't they do so much better with this type of a concept? Now, the average premium we see on this product is $60,000 to $65,000. Now, the maximum face amount, based on the single premium paid, is $450,000. We do have 2 underwriting classes, non-tobacco and tobacco, and in those underwriting classes, we will issue any risk through simplified underwriting, standard through table 4. Now, I'll be talking a little bit later more about underwriting and more specifically our point of sale underwriting, which allows you that as soon as you finish an app, over 90% of the time, we're going to give you an underwriting decision right there at point of sale. Cash values accumulate in the life insurance product on a non-participating basis. Partial surrenders, they're available from the life product, but they're permitted after the life product has become paid up, 7 or 10 years. Loans, they're available at any time from the life product at a maximum interest rate of 8%. Now, the accelerated death benefit rider is what we're going to get into next, and clearly this is providing living benefits to your client at a time when it's needed most. Very important to say out loud, though, that this is not replacement for a long-term care policy. Should not be sold that way. Long-term care insurance is the best approach to solving a long-term care need, but as you know, many of your senior clients cannot afford long-term care insurance. So isn't it nice to know they can accelerate the life insurance benefits in a product to help with their living benefit needs? Now, there are 3 health event triggers that will allow you to accelerate the benefits on this rider. They are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. This truly does increase the liquidity of the life insurance face amount, and upon a decision to accelerate, which can happen any time after issue, a lien for the amount of money that was taken or accelerated will accumulate at an annual rate of 8%. And of course, those amounts would be deducted from the death benefit. I'll show you that in just a moment in a little bit more detail. The maximum accelerated amount is $250,000. The minimum is only $5,000. But the great news here is that this benefit is going to be paid out once, and it's paid out in a lump sum. These are non-restricted funds. The client can use these for whatever they deem necessary. So now let's look at the definitions and percentages of payouts on these riders for Generation Legacy. Terminal illness, simply put, the client needs to be diagnosed as they're terminally ill with a life expectancy of 12 months or less to live. And in this case, they could get up to 75% of the face amount of the life product. For qualified nursing and extended care, both covered under the same rider form. For qualified nursing, they need to be chronically ill, confined to a nursing home continuously for 90 days with the expectation of a permanent confinement. Here they could accelerate up to 50% of the face amount. For extended care, again, they need to be chronically ill, have been so for 90 days, but now they're requiring care provided by either a licensed home health care agency or a licensed or state-certified adult daycare center. Here again, they can accelerate up to 50% of the face amount. Now, the key thing about these riders is that they, in fact, are designed to be able to pay cash now, but still have, in most every case, remaining death benefit at the client's death. Keep in mind that some states, in fact, there are restrictions on these riders, different percentages, and we do cover that on our state approval charts. So you can see, I know URLs in Pennsylvania, that instead of 75 and 50%, in Pennsylvania those amounts are 65 and 40%. So we talked about chronic illness, right, and how that would qualify you in the qualified nursing and extended care situations. Let's talk about what that means. If the client satisfies either of these definitions, they're considered to be chronically ill. The first one is they can't perform 2 out of 6 activities of daily living that you see on the screen. But maybe they're okay on their ADLs, but possibly could be suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, we consider them to be chronically ill. So let's look at an example of how the payouts might work with the lien approach. So this is a client who has a $100,000 face amount on the life product. They're terminal. So they elect anytime after issue to accelerate the benefit at 75%. So they're able to get a cash payment as a living benefit of $75,000. We do add a $100 service fee for that transaction, so the lien starts at $75,100. Now, if they were to die immediately after getting that cash, no time for interest to accrue on the lien, the remaining death benefit would simply be $24,900, which is the face less the lien. But the more practical example is probably this one, and that is where they die 1 year after getting that cash. So now a whole year's worth of interest could accumulate on the lien. Keep in mind that the maximum rate we can charge on that lien is 8%, but I'm going to illustrate that for this purpose. So in this case, the remaining death benefit after a year would be $18,892. So this client in this example would have to live over 4 years in a terminal situation for the interest to outrun the remaining death benefit. So as you can see, it's really designed, again, to pay cash out as a living benefit, but still have remaining life insurance. Now, could the riders terminate? Well, technically they could. Let's talk about a few ways they could. The first one would be, what if the whole life policy ends? We might think, well, hold it. If the SPE is paying the life product, how could the life policy end? Well, maybe the client who gives you $50,000 up front and says, okay, I want to get this started. It's leave behind money. I don't need the money. I just want to pass it along. 2 years later, into a 10-year plan comes to you and says, hey, I need some cash. I need that money. So if that happens, what you would have to do is cash out the life product, which has very little cash value at that point, and have the remaining 8 years of the SPIA paid to the client in payments. So that could occur, but if that happens, of course, they lose the accelerated death benefit rider. If the client dies, we pay a death benefit instead. And finally, if you accelerate under, let's say, the nursing home provision at 50%, you can't accelerate a second time. It's paid out once, and then it's done. At that point, the other very odd scenario could be, what if that client who was terminal lives over 4 years and the interest does outrun the remaining death benefit? Even though it's unlikely, technically the whole life policy could terminate. And in that case, the riders would terminate. But the owner at any time has the option to repay all or part of the lien to keep this qualified as a life insurance product. Keep in mind, even though you accelerate these riders, they do have cash value still growing in the life product. And if you accelerate one of the riders, keep in mind you cannot also have a policy loan going on. It's one or the other. The last thing that I'll tell you on this subject is that, like every company should tell you, is that no matter whether you're accelerating our rider or any company's rider, you should always tell your client to consult with their tax advisor, because technically these benefits may, and the key word is may in certain situations, be considered taxable as a living benefit. So here's a quick illustration of the potential payout. This is that female 70 non-tobacco user who has $50,000 of leave behind money. We issue a face amount for her of $78,000, nearly $451. But look at the payout she could get as a living benefit, and of course still have in most every case remaining life insurance benefits. This is real money for a senior who has a long-term care situation and quite frankly just wants some money at end of life. And it's great to know it's available in this type of a rider. One more thing, another thing on tax. We know that the key tax efficiency of this program is passing money along to a family member and increasing your estate value on a life product. It's paid income tax free. But what about the transfer of the funds? Is there some tax efficiencies there? We feel as though there is. Let's say you're transferring an IRA. An IRA has never been taxed before, correct? Eventually Uncle Sam has to get their money. If you're rolling an annuity, there's a basis and a gain. That gain is eventually going to need to be taxed. The beauty of our product is when you roll those funds into the SPIA within Generation Legacy, that money's going into a qualified SPIA that's going to be used as a vehicle to pay for life insurance over a 7 or 10 year period. So as a result, we're able to spread the tax out on that rollover within the same 7 or 10 year period. So your client will in fact get a 1099 on the interest income for the money they rolled over. Keep in mind that those payments we make from the SPIA each year for the life insurance, they do satisfy the RMD rules. That's a good thing. And as I mentioned, at death, we know the life insurance is paid income tax free, but what about the remaining payments from the SPIA? Well, you know, when we pay those out, normally we pay them out in annual installments, just like we would have made premium payments. We could pay a commuted lump sum if the client would like. But no matter how we pay it out to the beneficiary at the client's death, they would get a 1099 based on the distribution on the taxable portion of that money that's not seen taxed before. So Uncle Sam basically always has to get paid at some point on that rollover money if it remains. So let's look at the application. Key thing here is that because you're dealing with qualified funds, we have to ask the question on the app, do you want a withholding of tax on the money you're rolling over? We ask that question, but the way we've designed this product is that we cannot accommodate a withholding. We need all the funds to make it work. So please make sure you check on the app that you do not want tax withheld from the annuity you're rolling over, or we have to send everything back to you. So now let's look at some premiums to death benefits. And I want you to start thinking about those clients, especially those annuity clients you have out there right now, that you know their only plan with that money is to pass it along. And if you don't know, you should be asking those questions, and we'll talk about that in a moment. So here's the 65-year-old with 50 grand of leave behind money. Because they're 65, we're going to issue a 10-year SPIA along with the 10-year life product. For the male, the face amount would be $77,361, and for the female, the face is $87,031. So what did you just do for the female 65? You immediately increased her estate by over $37,000. Not a bad situation considering probably the low interest rate she was making on that money in the annuity. Keeping in mind, by the way, if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. Now, she may say to you, Jason, what if I left the money in the annuity and it was making 3% interest, good luck on that, and a 25% tax bracket? It would take her over 19 years just to accumulate the $87,000 plus we're going to pay from the life insurance contract. Keep in mind, by the way, the life insurance is always going to be there to pay an income tax-free death benefit for the client's beneficiary. What about the 75-year-old? A little older, a little shorter life expectancy, but the numbers still look good with this $50,000. Because the client's 75, we're going to issue a 7-year SPIA along with the 7-year life product. The male gets a face amount of $61,516 and change. The female a face of $67,000, nearly $9. So you increase the 75-year-old lady's estate by over $17,000, the gentleman nearly $12,000, and money they just plan to leave behind anyway. They're going to love you for this. The clients really like the concept, especially those that have true leave behind money. And what they're going to do, of course, when they go to the Bob Evans and they have breakfast or lunch with their friends, they're going to talk about this. And it's going to be a great opportunity for you to leverage that conversation and get referrals from your client. All right, this is a ledger which kind of gives you the ebb and flow of the cash. Keep in mind that this is a non-illustrated product. No signed illustrations are needed, but we do have proposal software out on our agent site that you can use that will give you illustrations in parts that look like this. We also have mobile software that you can put right on your phone or smart tablet, and we'll talk about Mobile Link in just a moment. But here's the female 70 who has that $50,000 annuity with a cost basis of 40 grand, so her gain is $10,000. In column 3, you see the money going in, 50 grand, but from that money, each year we're going to make a payment from the SPIA to the life product of $5,570. From that payment, about nearly $4,000 of it is excluded from tax. That was part of her basis, and the estimated taxable income that she will get a 1099 on is about $1,571. The ledger goes on to show an income tax-free death benefit of $78,451, as well as a potential commuted lump sum death benefit from remaining payments from the SPIA. So this is a great way to show the ebb and flow of the contract for the client that really starts to get them to understand how it works, but more importantly, make sure they also understand the estimated taxable income they will get the 1099 on. You never want to surprise someone at the end of a tax year with a 1099. What about submitting business? We try to make this very simple. What you're going to find on the Baltimore Life agent site is that we have product toolkits set up for every product you're contracted for with us. And in that toolkit, as we'll talk about and see, we have lots of great tools out there to help you sell and market our products. One of the things we have is our printable application and forms package. You answer a couple of quick questions, and it's going to automatically populate for you the forms that you need to do business. You can print the forms locally, you can order forms from us, whatever you might need to do. The forms also come with a set of instructions to tell you, here's how you get your business processed. Oh, by the way, here's the phone number to call for that point of sale underwriting interview that we're going to give you a decision over 90% of the time right there while you're on the phone. We'll talk about that more in a minute. So you don't have to remember these numbers or the times to call. It's all right there in front of you in the app package. Out on the product toolkit again, we have many other things. We have our agent guides. We have 4-color client brochures that you can order from us. We have our Mobile Link software instructions, the proposal software. We have letters, phone approaches, just many other things that I'll talk through some of these with you at the end of the session today. So now let's get into the second product. Let's get into single premium whole life. Similar concept, client who wants to create a legacy, increase their estate value, do it tax efficiently, but there's some key differences. The first of which is the origination of the funds. This product has funds originating after, of course, money not needed for daily living, but money coming from after-tax cash vehicles, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. Another difference, the issue age, 50 to 85, broader issue bands because we're working with after-tax cash funds. Underwriting, nice difference here. Simplified underwriting, but now we not only give you standards through Table 4 with non-tobacco tobacco risk, but also we have a Table 5 through Table 8 tier. We'll talk about that again. And finally, our accelerated death benefit rider, giving you the same 3 health event triggers to get at the benefits, but a little bit more aggressive way in order to get the funds out. And I'll talk about that in a moment. So 50 to 85, again, based on current age or age at last birthday. The 2 tiers of underwriting we talked about, that's a big deal, especially level 2, knowing that if you have those insulin-dependent diabetics who are using insulin to control their diabetes, and they're generally in pretty good health anyway, they're going to be able to get into that tier, and that tier is not available for Generation Legacy. Underwriting classes we talked about. What about the minimum premium? Again, it's only $5,000. How many of your clients, when you're doing fact finds, do you find the multiple sets of CDs they have taken out through the years and they let them roll, 5s, 10s, 20s, 50, whatever the amount might be, but that money is siloed and it's set aside for reasons, right? This money goes to this kid, second, third, fourth kid, the grandkids, the church. They have the money all earmarked. So if you know that their goal is to pass it along, why not help them do that in a much more tax-efficient way? What about the situations where you have clients who say to you, I don't need any life insurance, Jason. I have a burial account set up at the local bank. If they have a burial account set up at the local bank, it's probably a $15,000 CD set up that their kids know that's the money set aside to bury them. Well, here's how that might work. Mrs. Jones, you're 70. You're going to live many more years. Costs are going to go up. What if I was able to show you a way to take that $15,000 and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, you could get at some of that cash at end of life to help your family and still have some remaining life insurance. That's the burial account concept, and so many agents we talk to who maybe don't have a big book of annuities out there get started selling single premium that way. They sell smaller premium amounts, but they start realizing that in order to be successful in the asset transfer market, good fact-finding is so critical. What's the maximum face amount for this product? It's based on the maximum net amount at risk, and that's just simply the difference between the face amount we issue and the premium paid. That difference is the net amount at risk. And the good news is the software won't allow you to violate those limits, so you're in good shape there. I should mention that the average premium we see on this product is about $30,000 to $35,000. Cash values, of course, accumulate in the life product, the single premium whole life product on a non-participating basis. Here's another big difference, though. Partial surrenders. On this product, starting in the second policy year through the 6th year, we have a graded partial surrender capability. You can take out 10% in year 2 of the available cash, 20% in year 3, 30% in year 4. In year 5, it's 40%. And from the 6th year on, 100% of the available cash value can be taken as a partial surrender. Loans, they're available at any time, but I'm really not sure that the loans work well when you have such great partial surrender capabilities. This is really intended for that client who does get in a jam. More than anything else, most people just like to know mentally it's a great mental safety net that if they do get in a jam, they could get at some of their cash, and that's usually good enough. We talked about the accelerated death benefit rider, the same 3 health event triggers that we had covered with the Generation Legacy rider is covered here. There's one key difference, though. You know, this product still pays out in a lump sum. It's unrestricted funds. But here the client could say, you know what? I don't need any life insurance. Give me as much of the money as I can get as a living benefit, and I'm done. Or they could say, let's set aside a little bit of life insurance and accelerate the balance of the face amount. That's called a partial acceleration. So it's a little bit more nimble in the way you can structure the payouts. The definition for terminal illness is the same as we said before, 12 months or less to live. But here, for that client who wants it all now, can take up to 95% of the face amount, less a $250 admin charge, or do a partial acceleration. For nursing home confinement, same definition to qualify, but now because they're going to live longer, the maximum amount they can accelerate is up to 90% less the $250 charge. And finally, for extended care, home health care, and adult daycare, they could accelerate up to 80% of the face less the $250 charge. And again, with all these scenarios, do a partial acceleration if you'd like. Definitions for chronic illness are the same, 2 out of 6 activities of daily living, or a client suffering from that severe organic mental illness. Either definition qualifies you. So now let's look at premium to death benefits. They look pretty good, don't they? 65-year-old who's got 50 grand and a CD, non-tobacco user, here's what it looks like. For the male, they're getting a face amount at level 1 underwriting of nearly $82,000. The female, that same underwriting class, nearly $93,000 in face. And what you're going to find, because we have that level 2, right, for the person with a few more health challenges, across the board, all ages and genders, you're going to find it's about a $5,000 to $6,000 reduction in face amount for level 2 underwriting versus level 1. So these numbers look great, don't they? especially when you consider for that female 65 who had 50,000 sitting in a CD making nothing practically and still getting a 1099 at the end of the year, you increased her estate value by nearly $43,000. I mean, what a return, right? If her goal is to pass it anyway. It would take her 28 years just to accumulate that extra nearly $43,000, assuming a 3% interest rate and a 25% tax bracket. Always knowing, though, that that nearly 93 grand of life insurance is paid out income tax free to her family. Here's the 70-year-old, little older, little shorter life expectancy. Numbers still look good, don't they? That male, you're increasing his estate by nearly $24,000 at level 1 underwriting. The female, over $32,000 increase on a 70-year-old's estate. And of course, you have that level 2 of underwriting, which the face is about $5,000 to $6,000 less. So again, clients love it. Great opportunity for referrals. It's a great market to be in. Believe me, you sell about at least one of these a month, and you're going to have an unbelievable year. Same story I gave you for Generation Legacy is the same story I'll give you on forms for Single Premium Whole Life. Go to the Single Premium Whole Life Product Toolkit, get all the forms you need, print those out, you'll be good to go. We have all the marketing forms as well, and I'm going to talk about those in just a moment. So now I want to get into that point of sale underwriting. This is so important. You know, we have a great program, very competitive. You know, URL will talk to you about the comp. Great program, but what makes this fantastic is the point of sale underwriting. Knowing that before you start transferring funds around, that before you leave the home, you can get an underwriting decision. It's a great value. So as soon as you complete that app, you're going to pick up the phone during call center hours and be able to complete about a 12-minute interview with your client in our call center. They're going to ask the client the same health questions that were on the paper app you're going to submit, but the only difference is they're going to fire off the MIB and the drug hits to see if there's any different information out there in those databases versus how the client responded. If the client forgot something or whatever, we'll make sure we get clarity and get the right answer so we can make an immediate decision. Now, after we finish with the interview, any underwriting decision is communicated to you, not your client. So you're going to be the one telling the client if they were approved. Keep in mind, we'll also give you a confirmation number for that call that we ask you to write on the paper app you're going to submit. Once the appointment's finished, obviously, you want to send us all the paperwork. That's important. And finally, here are the phone numbers to call. Now, all this information on phone numbers and hours are right on in the app package, so you don't have to remember this. 888-368-9678. The hours Monday through Thursday are 9 a.m. to 10:30 p.m., as well as 9 a.m. to 6 p.m. on Fridays. These are Eastern times. We do support English and Spanish languages. Other languages are available upon request. And if you have a hearing impaired client, we have TTY services in English and Spanish. Key thing to remember, though, is the interview must be completed within 5 days of completing your app. Now, you might say to yourself, well, what if I write business on a Saturday and, you know, the call center's not open? I'm calling in late. I'm on a different time zone, whatever. What do I do? Well, no matter when you finish the app, you always want to, before you leave the house, call the call center. Work out with your client what date and time they want the interview to take place. When you call the call center, you'll leave your name and number as the agent, your client's name and number, and a date and time the client wants to be interviewed. Our call center will outbound call your client, get the interview done at the prescribed time, and again, call you back with the underwriting decision that you'll tell your client. So if you're calling during normal hours, it all happens in real time. So this works so well. These are our biggest two selling products here at Baltimore Life. Agents love it, and they've been using this process for years. It works very, very well. How do you pre-qualify an application? Good question. We have an app for each product, and the reason we do is that for Generation Legacy, there is one level of underwriting, standard through Table 4. So we have one section of medical questions for the Gen Leg app, Part A. Think of Part A as knockouts. If you get a yes in Part A, it just means your client that did not qualify for through 4 tiers of underwriting. But if you get all no on the app, height and weight looks good, the MIB and drug history looks good, we're going to issue. What about for single premium whole life? You get 2 tiers of underwriting. Standard through Table 4, Table 5 through Table 8. So we have a Part A and B. Still think of Part A as your knockouts. If you get a yes in Part A, it means your client does not qualify through 8 tables of underwriting. But if you're all knowing Parts A and B, height and weight, drug history, MIB look good, we're going to issue Level 1 underwriting, standard through Table 4. If you're all knowing Part A but 1 yes in Part B, we're going to issue Tier 2, which is standard, Table 5 through Table 8. All right? So that's a quick way to remember how to pre-qualify your apps. So with that, I'm going to pivot real quick, and I'm going to bring up something I think you're really going to like, and that's some information on the marketing support that we provide. And we've been talking all along about the agent website at Baltimore Life and our product toolkits, right, where everything is out there, your app and forms package, and all the great sales and marketing forms. Well, here's a screenshot of the agent site. And for every contract you're contracted for, or product you're contracted for, you'll see a corresponding product toolkit. So when you click on, let's say, Generation Legacy, it comes up. And here's what a toolkit looks like. So everything is out there you're going to need. So let's talk about some of the things that are in this toolkit. The first one, and the most important one you saw, was we referenced the printable application and forms package. That's there. The state approval chart, it's right underneath of it. But mobile link, this is the one I think you're going to absolutely love. If you're not on your mobile phone right now, type this one in or write it down. It's mobile.baltlife.com, mobile.baltlife.com. And when you go to the mobile link site, and of course there's a web address, you're going to see that center panel on my screen that you're looking at. And essentially it's like having now an agent guide right in the palm of your hand. So the product information's there, the underwriting guidelines are there, as well as, most importantly, a rate and value calculator. You can show everything right on your mobile phone, and it's amazing how well those ledgers look on a mobile phone. So I think you're going to love it. You'll have that for both of the products we've talked about today, as well as our final expense product called SilverGuard. Now, once you're on that page, and I use an Android device, you can hit your shortcut for your settings button and save that page as a shortcut right to your phone. And it'll create a little ship icon you see there on the right or the left. That's the Baltimore Life ship, and it says Mobile Link. And that way you can launch that site real quickly right from your phone. Secure Solution Presenter. Agents are great storytellers, but you know, when you're a great storyteller, it's great to have visual aids. And Secure Solutions Presenter basically is an electronic storybook for presentations on all of our products and financial concepts. You can view the presentation on your screen. You can print it as a hard copy if you don't like to work electronically, or email it. But here's some examples of screens from Generation Legacy. Very graphically appealing, explains the concept of asset transfer, who it benefits, key questions to be dialoguing with your client about, features and benefits of the product. And then with Generation Legacy, for example, we use that gift box concept, showing you how 2 products work together as one. We show examples, different ages and genders, of how you can increase someone's estate with a single premium. We go through the accelerated death benefit riders and how they work. So all that, again, can be found on the Secure Solution Presenter software, again, that you can launch right from the product toolkit. You can download it right to your laptop. It doesn't cost you a thing. It's safe. Great tool to use. Here's another form that I really recommend, especially if you don't have a good fact-finding process, because in this market, it's all about finding the money. So on this form, our asset transfer analysis form, in the center, you can record the client's current liquid assets, their CDs, the money markets, annuities, and so forth, and show them that if they take a portion of those funds not needed for living, what that impact would be if they put it into one of the 2 products we talked about. On the bottom of the form, you can record the client's current income because obviously you want to make sure they have enough monthly income now and going forward before you start disturbing their assets. At the top of the form are those key questions that you can dialogue with your client about. One of them might be, Mrs. Jones, do you have money that you'd like to leave behind for your family or favorite charities that's not needed for your daily living? And most people get the leave behind money concept or the sideline money concept. They get it. And if they don't, it's going to create a great conversation with you and them. This screen right now, I'm highlighting another document on our product toolkit, and it's our sales idea document. Each of these ideas that are bulleted are, reviewed with you in detail within our sales idea document that you can find out in the product toolkit. We've talked about some of these today. One of them, of course, is think about those annuity clients you have that absolutely have no plans of needing that annuity for income. They just want to pass it along. Great prospect for generation legacy. I think Jason referred to it. What about those older paid-up life policies where the cash values are close to equaling the death benefit? Sometimes you run into 2, 3, 4 of those for a single client. If the client is eligible, you can 1035 those in to single premium whole life and give them a greater death benefit. What about some of the old ULs where the cash values are going in the wrong direction? As long as you can rescue at least $5,000, you can get them into a 1035 exchange in a single premium whole life product. And finally, I talked about the burial account concept. Such a great way, especially if you're selling in the final expense market, of getting clients to start buying the single premium concept. And once you start selling the 5s, the 10s, and the $15,000 face amounts, you're going to start realizing, hey, this works pretty well. Maybe I should be doing better fact finds to find the money so, in fact, I'm in a better position to sell the bigger average premiums that we talked about. So lots of other great sales ideas are out there for you. Have a blank piece of paper when you read this because you're going to start thinking immediately about people to go out and see and talk to. We also have these super customizable marketing documents. Explains the concept of asset transfer, features and benefits of a solution, and then you can customize the document with your contact information and print as many of these as you like to support your marketing efforts. We have print ads if you still do print advertising out there. We have letters. We have mailer postcards that you can just take the copy, go to your lead vendor, and get those working for you. We have phone approaches. We have third-party articles. We have white papers out there that support you. Everything out there is on the site. It's right there again at the agent website, and you'll click on one of the product toolkits. We have those for all of our products, and everything I just showed you, plus a lot more, is out there for the taking. So with that, before I hand it back